If you're wondering what happened in the Cartersville and Bartow County real estate market and what that means for you as you move into 2026, I'm going to share the numbers. I'm going to share what I'm seeing and what I think I'm going to be seeing next year. No headlines, no hype, just clarity on what we're seeing right here in Bartow County. So, you ready? Let's start with Cartersville. So, when we look at Cartersville in November, I'm in December, obviously, and we're looking back at November, and we're also going to be looking back at the whole year. Just how has it been all of 2025? Because it's not going to drastically change with more and more months of data. And I want us to be prepared as we're going in. So let's start. Active listings are up 18% compared to last year in Cartersville. So that's anybody who has a Cartersville address, 18%. We're up 3% from last month. The median listing price is $399. So we've seen that come through all year. It's $399,900 to be exact, but we've seen that that number be right where we were at for all of 2025. I always like to tell you what that means is the closer your house is to that number, the quicker it's going to sell because that's where most of the buyers are buying at. In fact, this one's painful. Like I don't. Ugh. Average days on market are up 53% year over year. 53%. I guarantee you are feeling it. I'm feeling it. Um, the median sale price was 343,300. So the 399,900 is the list price, but when houses are actually sold, it's 343,300. Now, that's a little bit lower than most of you want to be. So, a little bit, we're going to see that in the units. They're down 6% year over year and down 16% from last month. So, what does that actually tell us? Because that's a big key. What do these numbers mean? Is it good? Is it bad? Is it normal? What does it mean? Buyers have choices, sellers have to be willing to negotiate, and positioning your home is the most important thing that your real estate agent is going to do for you. That's pricing and marketing and negotiation. Those three things are very, very critical. And homes are taking longer to sell, not because they're bad homes, but because buyers are just taking their time. Because, first of all, they have the time. Second of all, it feels like such a big decision. And I would say the noise out there online is very, very confusing. One article will come out and say, hurry and buy because interest rates, when they go down, buyers are going to come out of the woodwork. Completely true. Another headline will come out and say, don't buy now because home prices are about to crash and you'll be able to get a deal. Could be completely true. But neither of those options are probably what's going to happen. It's just, we're not seeing either extreme, I don't think. But I think with all that noise out there, it's causing people to pause and take their time. And for sellers, that feels painful. If we look at Bartow County, what's happening there? Well, there's 24% more listings in all of Bartow County, but we're down 2% from the previous month. So that's kind of a little bit good. If you're a seller in Bartow County, there's a little bit less competition. That's very common this time of year. A median list price was 400,000, so very close to what Cartersville was. The median sales price was 338,500. So all of Bartow County is kind of right there at that same number. We're listing houses around 400,000, but where people like to sell them, buy them at is pretty close to 340, 350, right around there. Across the county, days on market are up 43% this year. So still slow. Units sold down and down 9% year over year, down 26% month over month. Now, this is where seasonality matters because November and December are always slower months. Yeah, there's just less people that wanna move during the holidays. Buyers decide to sit it out and get through the holidays. Sellers take their homes off the market sometimes, so it just slows down this time of year. Weather can play a factor, although we hadn't had a lot of that this year so far, although it's cold. But I don't think we're in a crash. I think what's happening is it's normalizing, and normalizing can feel extremely painful if you were riding the what I want to call the high, all the highs of everything. But it housing market is kind of normalizing. I've been in real estate almost 13 years. So when I first got in the market, we were coming out of the housing recession. And so we've kind of been on this swing up. Now, what we don't want to see is some kind of crash down. We want to just kind of see a little bit of a normal market like we used to have. So I think that's where we're headed. The inventory is up, but it's not flooding the market. People call us all the time looking for a certain house, and we can't find it. We had to wait on it. We have to go hunt it. So while we're seeing inventory come up, considering how low inventory has been, it's up, but it's still not like you have tons of houses, especially if you are looking for something that's in that sweet spot of where the houses are selling. Those can go very quickly. Um, Days on market are longer because buyers are really behaving more rational. Like a lot of buyers got caught up in what I like to call a little bit of the gambling feeling where you just had to win the house. If you had to pay over, it was fine. If you waived your repairs, it was fine. If you paid the difference between what the house was really worth and what you could buy it for, it was fine. Well, now they're not acting like that. They've gone back to being sober. That's what we're going to call them. They are sober buyers making the largest purchase that they probably will ever make. So a little bit more rational there. Another thing is your real estate agent. I kind of smiled when I said that because your real estate agent matters now more than it used to because homes don't sell themselves anymore. You can't just put a home up for sale and expect it to sell. It's got to be positioned well. Now, one of the things that still irks me, drives me crazy, and I just want to call the homeowner and say, please, please don't do this, is when I see that the homeowner is hiring a real estate agent who does no marketing, takes photos with a cell phone, no video, no plan, and the seller just is not realizing how bad that's going to hurt them and how painful the process is going to be. And sellers have to participate in this market. The homes aren't selling themselves. The real estate agents matter, and sellers have to be willing to negotiate, especially if there really is things wrong with the house and things like that. We don't want to test the market. We want to position your house as much as we can to actually sell. And we kind of know the average days on market for each price point. So if you're in that price point, we should be hitting that average days on market or less. And if we're not, then either we're not marketing it well or it's not priced appropriately. Those are the only two things that it can really be once you cross over that days on market, price or marketing. All right, so how did our team perform this year? Well, today we have closed 71 homes this year. We still have one more closing, so I think we'll end up at the end of the year at 72. So that's about 6 closings a month. It's like 5 point something, but if you'll forgive me, we're just going to round up to 6 per month. So we were pretty happy with that considering how down units are across the board. So we really come out ahead this year versus last year, but just a smidge. So what that shows is that the market doesn't always matter. It can you have a strategy? Are you consistent? And do you execute the plan in order to get your seller's house sold and to help your buyer find the house. That is this whole game of real estate. If you're a real estate agent, is to sell the house, find the house, sell the house, find the house. So we were happy that we did that. Let's talk 2026 predictions. Are you ready? I think interest rates are going to come down a little bit, but not near what people are hoping for. I really like FHA, USDA, and VA loans are already under 6%. Now, not by much, but they're like 5.87, things like that. But I would like to see 5.5 as the average across everything because I think that's a really normal, good interest rate. Now, home prices, are they going to appreciate next year? I think it's going to be really flat, y'all. I don't think we're going to see a whole lot appreciation because I feel like everything in the economy is just still so high that people aren't going to move, but they're not going to lose what they have. I think it's just going to be flat. I hope I'm wrong on that. And I hope we see some positive 2 to 3% is what we would call just normal appreciation, but I think we're going to be flat next year. The big thing about both of those, if we get to 5.5 across the board and appreciation is kind of flat, so maybe 1%, we don't want -1%, so we'll just say flat and 1%, is that's very stable to kind of build up from. We don't want it to be that way for long, but it's better than when we were going through the roof and we were in a what we'll call a irrational market versus where now it's very rational. So I like seeing the stability for people. So home prices, I don't think they're gonna crash. I think we're gonna stay very stable. I think we may have a few more foreclosures than we've had in the past. I think we're going to see people have to stay in their houses longer than they probably want to, just because if houses are not appreciating quickly and you want to sell it, you've got to build up some equity to make all those numbers work. I also don't think we're going to have a ton of new inventory. I think we're going to still just have these units coming up. I don't think we'll see like how much more inventory we have this year over last year. I don't think we're going to see that next year. I think year over year, it's not going to be such big numbers. And I think for the buyers and the sellers, we've got to look at days on market in weeks and not days. And that's a kind of a shift that we've seen happen this year is we don't count days on market like, well, 4 days on market, we should be under contract. Now we're thinking a couple of weeks across the board. They're just not moving super, super fast. So my overall prediction, this is terrible, but it could be what we would just call a nice stable, which can also be a little bit boring in that there's no huge up, no huge down, but wouldn't a little bit of stability and boring in one section of the industry be exciting? Can you be boring and exciting at the same time? I'm not for sure. I'm not for sure, but that's where I'm going. All right. So, who is this market working the best for? Sellers, you got to price your home correctly. You want to get your home prepared. I talked to a seller the other day that's lived in their house for about 30 years, and I recommended let's go ahead and get that home inspection and make sure there's not something that you're not aware of. Because if we're under contract and we have to negotiate it, that is not how you negotiate from a position of power. You want to be aware of what's going on in your house. And used to, we never did that. But in certain cases, I definitely think it would be worth it. And then for sellers, I also think you need to understand today's buyers that they're just a little bit more cautious and they really expect you to work with them. All right. So, what about buyers? You got more options than you had before. I want to say you also have more options with financing. There's a lot of programs out there that can really make a difference in getting you in a home. So that's always a good thing. You got a lot of leverage. I mean, we got more leverage for buyers right now than we've seen in probably the last 5 years. Home inspections, closing costs, all of those kind of things. Most sellers are willing to negotiate with us and that's in your favor. And then on home inspections, I mean, really, like used to when somebody would find something wrong with a house, we would be like, "Mm, we're not fixing it. If you don't want it, then we'll just disclose it to the next buyer and they'll take it because there was 10 people behind you." Well, that's not happening now. People are a lot more, if you find something wrong with a house, willing to try to figure out how to get it fixed or compensate you so that you can get it fixed after closing. The power's not disappeared, but what's happened is it's redistributed. For a long time, sellers had all the power. I don't think we're in a market where the buyers have all the power right now. I think it's kind of redistributed between both. And the better your house is, you have more of the power. So if you're in great condition, you're priced appropriately, we're marketing it well, you've got a little bit more power there. But a lot of people, it's going to feel like a give and take, and that's not always fun, but that's where we're at. All right, so if you're thinking that you want to buy or sell in 2026, this is the time of year we can get a plan together. What do you need to be doing now if you plan on being in a new home by spring? What do we need to do now if you plan on selling your house this spring? Listen, a conversation with us is completely free, no obligation. We just want to get you started on the right path. So reach out.